Hi guys, welcome back to my channel. Let's now talk about one of the most effective replacements for a loan from the bank. Do you remember when your parents or their your grandparents used to go to the bank and they used to wait for several days just to get their loan approved, whether it was to build a home or to buy their next vehicle? Banks were very important entities in catalyzing the purchasing power of the common man in a past few decades. But what happened later? What changed this equation? Why do people go to bank? Because either they have to deposit money or they have to draw money or they have to invest money. Now, if you are able to get the same kind of loan, the same kind of withdrawal power without going to the bank, with just the use of an ATM or a credit card, you would not be going to the bank, correct? So the era of ATMs where you can go and draw fast cash, or the era of credit cards where you're approved a certain limit for you to spend, it changed the whole equation and started balancing the power which was concentrated with banks. Now it is further getting diluted with decentralized currencies like cryptocurrency. But hey, let's just focus on the topic for today, and that is, what are credit cards doing to you? Are they healthy for you? Is your dependence on these secondary agencies like credit cards, credit card loans, what do they do? Well, banks make money by charging you interest on the loan they give you. So this is one of the ways banks money, but banks are also invested in a lot of government projects. They're also interacting with several hedge funds, and there are many other sources where banks make money, but their main source of income is the return on the interest. If you invest money with the bank in any form, or you draw money from the bank, they give you an interest, and this interest rate is very prime source of income for the bank. But for credit cards, it is not like that. They give you short cash. They don't take that much time for approving a loan to you, and they charge you interest based on your transactions or on the time you take to return money. Let's say you spent $3,000 from your credit card account, and this was all the money you drew from the credit card, and you haven't paid your credit card bills for 5 months. So the amount of money you will be paying for if you haven't returned your credit card money for a long time, the interest rate is very high. So even if you are transferring cash from your credit card to any other entity, the interest charge and the tax on that particular transaction is very high. Essentially, credit cards have a way of coming up with very catchy taglines like no interest or a very low fee transaction. They say all these, but if you don't return their payment on time, they keep charging very high interest. In fact, I had a very bad experience with one of the cards. It was called as Discover Cards, and I had forgotten to make the payment for 1 month. Every month I used to make payment on the same date, and for 1 month I had forgotten to make the payment. Initially they charged me $75 every month, and it became $150. So this amount kept getting increased, and I checked my account after a couple of months, and then I was like, where did all this money go? They charged me all these fees because they had hidden the clause in fine print, and I was not aware of it. So credit cards are very, very dangerous if you do not have the capacity to pay the credit card bills every month. That means credit cards are getting used to a habit of buying things you cannot afford, and they are charging you more and more money. So guys, if you are very careful about investing, I don't think you would spend money using credit card. You would buy things which are very much in your capacity to buy, and you would interact with the bank with the reasonable rate of interest and confirm how much you're being charged per transaction, inquire how much you're being taxed for these transactions and such. Credit cards have a lot of fine print clauses. They have a lot of rates which depend upon what kind of transaction you're doing. So they give you money very easily. That means there is a lot of nuance, there is a lot of heavy price attached to it. Anything which comes free is not cheap. It is very, very expensive. Remember this. So next time you build your dependence on a credit card, or you buy something because you think the credit card is a means for you to buy something expensive you cannot afford, think twice, because this is getting into a debt vicious circle. You don't want to be in that vicious circle. So I did not know this by personal experience, and by learning more and more about credit cards, I have become more careful. I see how much balance I have, and I spend. I try to convey this to people who are getting more and more credit cards signed in their names, because in our country, in United States where I live, you are given loan interest rates based on your credit card line, your credit line. If you are able to make credit card payments, you have many credit lines open, you have higher chances of getting a loan at a lower interest rate. So the more credit lines are open, the higher is your credibility with the government. Your score becomes more important. So this is a very tricky way of I would say trapping you into the system of buying more, spending more. This is going to churn the economic cycle. Macroeconomics looks great, but for the individual, this is like getting into a debt cycle. So think about it. Next time you use a credit card, you swipe a credit card, have you read the fine print? Are you getting into debt cycle? With that, I'd like to sign off. This is Vidya Patil bringing you usual news with unusual insights. Until next time, see you.